Welcome back to the home stretch of the program. South Africa's Reserve Bank has decided to hold its benchmark rate steady at 6.75%, a move that did not come as a surprise to market watchers. Well, for more on this topic, I'm being joined at this time by Channels TV's correspondent Becky Miley in South Africa for a summary of how the markets are reacting to the news at the close of the week. Hello, Becky. Welcome to the program. The South Africa Reserve Bank's decision to leave the benchmark rate unchanged was widely expected. But what's investors' mood to the news now?
Well, as you can see, since this morning, early this morning, the rand has been quite steady because the rand was 0.24% firmer this morning if you compare it to Monday, where it was 0.1% weaker. Currently it's trading at 14.5 per dollar, which started early in the morning, and around 16.2 per euro. And then the stocks opened at a high this morning. Investors are, putting money into the market again. And the futures, top 40 futures in the index went up by 0.44%. So it looks positive.
Okay, so how do you balance out the fact that policymakers say the current stance of the monetary policy is accommodative and in the interest of sustainable growth, with an economy that is struggling so much in job cuts, increase in tariffs, and fuel price hikes?
Growth generally needs a higher GDP per capita. So them saying that it is sustainable for growth, I don't think that is quite a good statement, because if you look around, currently in South Africa, the unemployment rate is so high, and then everything is increasing with the fuel price increase. You see now transportation is going high. The city of Johannesburg has decided to raise its tariffs as well. So I don't think the current monetary policy is accommodative to everyone.
Okay, other than that, what can we expect to see from the markets in the coming week?
Well, in the coming week, because tonight actually, South Africa will be rated by international credit rating company. So we are yet to see. And the Minister of Finance expressed unhappiness last week over the electronic toll gate company that is cancelled debt of motorists that were owing the company. So he's saying that might affect, as well as, we are very close to the political elections in May, so there's a whole lot happening in the political climate. We have one opposition party today marching to parliament, complaining about, the past few weeks, power outage and everything. And then the taxman is on strike. So we are yet to see the ripple effects of that next week, what will happen to the economy. Because interestingly, there is a new CEO who was just introduced, but now he just came to find fire because there is a nationwide strike. The taxman is on strike.
All right, thank you, Becky. We'll keep our eyes on the SA economy and the markets, especially with the Moody's report being expected. Away from Johannesburg to the domestic bourse here, the market finally ended its negative run and managed to claw back some of the losses recorded in 4 straight sessions. We'll cross over now to the floor of the exchange, where Temple Ashaju is standing by to talk us through on some of the details. Hello, Temple. I guess it's safe to say, thank God it's Friday. It appears to be a somewhat bright end of the week for stocks ahead of the weekend. Of course, talk us through some of the happenings at the bourse at this time.
So we're seeing some positive movements in the market now. We've seen a good recovery from the losses we've had in the past 3-4 trading sessions. Yesterday we saw a marginal gain of some 0.01%, but as we speak, the market has been up to the highest so far today is 0.45%. And now it's around 0.33%. It came down to as low as 0.31% earlier, but now we have it around 0.33%, and it looks like it's going to rise further. At the end of the day, we see the market closing green because we've seen some heavyweights that have actually been pressured in recent time, currently making waves in the market. Talk about the industrial goods segment of the market, which is currently up some 2.08%. If you take a look at what Dangote Cement is doing right now, it's near to, it's almost 2% plus, and CCNN has crossed some 4% plus. And the oil and gas segment of the market is also driving up performance. We see 11 PLC kind of experiencing some rebalancing in its share price right now, as investors have become more positive on account of the dividend that is to be declared by this particular company. Earlier in the day, we also saw consumer goods segment of the market also rising, was a bit positive, but then we suddenly saw a huge profit taking on this particular companies, quite a number of the companies that are tradable in that sector, and so it's currently in the negative territory. But in terms of the banking space, yesterday they helped the market very well, but due to a lot of the earnings that have been released so far today from Sterling Bank, from FCMB, from Fidelity Bank, all of the tier 2 names that have been left hanging all along have now released their earnings. A whole lot of these companies have also proposed some dividends to a lot of investors, the investors and trading community here. So you have some investors, some traders that have actually invested when the share prices were low. Now that the dividends are out, it gives them room to basically sell down, reduce their holdings there, and then go put their money in a few other names that are yet to release their numbers. For example, you've got FBN Holdings. The numbers for FBN Holdings is yet to be released, and of course this is a company trading at some highs right now, 8 naira 15 kobo. So by the time that also happens, you see the typical way of doing things here. For the sake of capital appreciation, the traders will want to sell down, reduce their holdings, and just be able to take a bit of the dividend after they have done their valuation. So overall, we do expect the markets to close positive today as we end the month of March, closing down Q1 2019 and then launching next week Monday into Q2 2019. And of course, a new month where expectations will become high on the passage of the budget, the preparation of these new administration, the president-elect, getting set to also do things and electing his cabinet members and choosing his cabinet members, and of course bringing out a fresh policy direction, coupled with the fact that we have a 30,000 naira minimum wage that has just been signed into law. So all of these are the reasons why you have these expectations. Amen.
All right, thank you, Temple. Always a pleasure talking to you. Have a good Friday indeed. Away from the domestic boards, Kenya's government is currently in talks with the IMF about a new standby facility, but says it is not desperate for a deal. The East African country's economy has been growing steadily and inflation expectations remain within the target range. A previous $989 million loan arrangement had expired in September after the government failed to meet the IMF's conditions for an extension, including the repeal of a cap on the commercial lending. As of now, there is no timeline for when an agreement might be reached, but discussions are expected to continue during the IMF spring meetings in April. And Zimbabwe is battling the nation's worst economic crisis in over a decade. The scarcity of foreign exchange is causing shortages of food and fuel and a surge in inflation to almost 60%. The country's attempt to ease dollar shortages and stop its currency from plunging in the black market is also showing little sign of working. Converging its official and parallel exchange rates have also been an uphill task, as the low supply of dollars on the interbank market is pushing Zimbabwean businesses in the black market. That's it on the program today. Very many thanks for watching. I'm Imana Amam.